Hello everyone, welcome to Smart Investing. This is the day that we are going to go and deep dive into Tesla earnings. So stay tuned until the end of the video because I'm gonna go into every single detail of the balance sheet, income statement, and cash flow statement. I'm going to give you my honest opinion about the evolution of basically earnings and cash flow and income statement from Tesla over the quarters, over the years, and what I think will happen in the future. So before we start to do that, I want to tell you that I'm not a Tesla hater. So I'm not at all a Tesla hater because I own myself a Tesla. I actually just bought myself a new Model Y 2026. So, you cannot say that I'm a Tesla hater. But I think I only look at it from an investment point of view, not from a hype point of view or feel good point of view or whatsoever. I'm an ex-investment banker. I'm a CFA charter holder. I'm also now a CFA instructor. I give classes to CFA students level 1, 2, and 3, and I go deep down into cash flow analysis, income statement analysis, all the items you need to remove and to tweak and here and there to make a very true picture of the company financial health. And this is what I intend to do today. So if you want a feel-good video, if you want a video that will just confirm your bias about Tesla, just move on. If you want an honest video about the situation of Tesla, then stay tuned until the end of the video. I'm going to show you everything you need to know. It's not like every single detail, but I've done a very good exact summary so that you understand exactly what the situation is with Tesla. And then you form your own opinion. At the end of the day, you are the one who invests your hard-earned money into Tesla, and you are the one who decide whether or not your money worth to be invested in a company that I think is overvalued, and there is only a hype and promises about the future. And I'm just giving you a bit of heads up, but I think there is a clear deteriorating financial environment for Tesla. So let's get straight into it. So I asked ChatGPT to do me a summary, exact summary between the evolution of the income statement, cash flow statement, and some of the balance sheet item, so that you have a clear idea of the evolution of the Q2 2024 to Q2 2025. And this is what matters for this quarter. You comparing Q2 24 to Q2 25, so 1 year gap for the same quarter, and you just see whether or not the company is evolving in the right direction or whether it's evolving in the wrong direction, and what type of lesson and challenges you can draw from these changes. So let's go into it. So first of all, the income statement. Income statement, the first item you have to look is the revenue. Revenue is basically the sales that the company is gathering during the quarter. You can see it goes from 25 billion to 22.5 billion. There is a decrease of 12%. So definitely Tesla is not growing their revenue. So this is not anymore a company that is growing their revenue. So this is something you need to acknowledge. Automotive revenue from 99 to 16.6, so they are selling less cars than they used to be, and it's close to minus 17% down. Regulatory credits is 900 million in Q2 24, and now is about 439 million in Q2 25. And what you have to understand is that these items of 500 million should be removed from the income statement in Q2 25, because these one are non-recurring items. You know that the regulatory credits will disappear. So this is something you will not be taking advantage going forward. So you should remove the 500 millions here. So half a billion should be removed from the net income here. So you understand? That means it's even worse than what is reported. Gross profit margin goes from 17.4 to 16.3. 16.3, but if you remove the 500 million here, you will get much less than that. 439 million should be removed from the income statement to get a clear picture of what will be going forward the net income if you don't take advantage anymore of the regulatory credits. So your gross profit margin will be definitely less than 16.3%. It will be probably around 13 to 12%. Operating income on a GAAP basis is basically collapsing by almost 42%. Can you believe that? Your operating income, which basically is your income you get from your key operation business, is collapsing by 42%. What can I say? You don't want to get excited, and I see a lot of YouTubers, Tesla to $1,000, but on what basis you are telling people on the internet that this stock will go to 1,000 unless it's only based on dreams and promises from Elon Musk that it will become the most valuable company in the world if Optimus and if Robotaxi and everything is going to go fine. But based on the current balance sheet, you cannot say that the stock warrants an increase to $1,000 from 300 and something dollar right now, you know. This is like totally misleading. So on what basis people are getting the valuation target of $1,000? Just tell me on comments if you have any idea, any clues of why they are doing this type of projection. This is totally misleading and is not serious. This is just clickbait, you know. And this is what drives me nuts with these YouTubers, you know. They want just clickbait, and a lot of people are getting trapped in this type of company who absolutely do nothing for the last 5 years on the share price. Extremely volatile, and they cannot read a basic balance sheet and income statement and cash flow statement. You know, they don't understand the company is deteriorating the financials. It's not improving the financials. It's clearly deteriorating the financials. There is nothing positive about the balance sheet, the income statement, and cash flow statement. That's just what the numbers are showing you. So let's carry on. Net income from 1.4 to 1.17 billion, minus 16%. And again, you have to remove the $500 million here, so it will be even worse than minus 16%. Earning per share, basically, sorry. I did the table again anyway. Earning per share on non-GAAP, it goes from 0.6 to 0.40%. So it's minus 13%. But again, the earning per share on non-GAAP basis, if you adjust it for the $500 million here, would be probably 0.20. So you see, it's collapsing. On the cash flow statement, you have operating cash flow goes from 3.61 billion to 2.54 billion. It's a collapse of 30%. Your cash flow, basically what is the hard-earned money, the hard-earned cash from your basic operation is collapsing by 30%. 30%. Just let that sink in. And it's without all the non-cash item. Cash flow, you cannot lie the cash flow statement. Cash flow statement is your cash, not all the non-cash item you can add and to window dress your income statement or make it look better than it is. This is the hard-earned cash you get from your operation. Okay? Now the capex from 2.27 to 2.39. So capex is pretty stable over time. You know, they are spending, of course, they are spending for the future of the company, for the future growth of the company. So it's normal for this type of company to see a lot of capex. But you can see that your capex is eating all your cash flow. So you end up with having no free cash flow. No free cash flow to equity. So basically you don't have anything left, you know? You see, it's close to zero. You go for 1.3 billion free cash flow to almost zero free cash flow, you know? This is crazy. How can people get excited with this type of evolution, this type of changes from one quarter to another over 1 year? You have and this is crazy, you know? To me, this is crazy. How can it be, you know? So on the balance sheet, you have the cash and investment for the 31 billion to 36 billion. So that's pretty healthy. They have a lot of cash on hand. Total assets from 112 to 125. Liability 45 to 49. So both have actually increasing more or less the same size. So basically, it's normal. And the ratio asset to liability would be more or less constant. So what can you say about the evolution from Q2 24 to Q2 25? Let me be clear, it's not good at all. So I know Elon Musk is exciting all the fan base, you know, because you know the balance sheet and the income statement and cash flow statement is not good. So he wants to get the fan base excited about the prospect of the company. And I understand that. I would do exactly the same if I was him. But if you only value this company based on hype and promises about the futures of Robotaxi and Optimus and Neuralinks and energy storage and all this, but so far, you know, it's not showing an improvement in the numbers. The opposite is true. So let's make it clear. Situation is deteriorating for Tesla. So what is important to understand as well is the non-recurring subsidy linked item to exclude. You have to exclude, as I said, the regulatory credit sales, because the government, European government, US government will actually hand these EV incentive in major markets. So the revenue stream is unreliable going forward. So you need to remove this revenue stream to make a true reflection of what the company is earning. All right? what you have to understand as well is that revenue and margin is declining across the board, even excluding credit sales. All right? Earning per share and net income, of course, they are still positive, but they are declining. Free cash flow is almost inexistent, you know? Free cash flow dropped almost 90%. They say here due to rising capex and falling operating cash flow, but it's not raising capex. So even the AI is wrong on that, because falling capex, increasing capex, not so much, you know. It's more like falling operating cash flow. That's the main reason why free cash flow is so bad, you know. Cash flow position strengthened, correct. Liability also climbed, but also asset also climbed, you know. So that's one thing also the AI is missing. So what is also important to understand from this earnings season is that, let me see, what are the challenges and headwinds for Tesla? First of all, market pressure. There is obviously a high-end competition with Chinese competitors, not even from European competitors. I mean, look at the European EVs, you know, they are all crap, you know. I'm sorry to say that. The only competitor I see that wanting me maybe to not buy a Tesla Model Y, but maybe another EV brand is BYD or NIO or XPeng, all these Chinese brands. Of course, they are challenging seriously Tesla position as the key EV brands in the market. You know, a few years ago, you only have Tesla as a very credible option in the market for a very technologically advanced EV. But today, all these brands, they're also very good, you know. Also, you see that the demand for EV in China and in Europe is less, you know. You have minus 20% in June for the European market. I don't want to go to politics. Of course, they had a lot of backlash about the position of Elon Musk for his political view and so on, but I don't care about all this, so I will not even consider that. Although that it's a kind of risk also that he's taking. If he become more and more political, then it will polarize a lot of clients who were willing to buy a Tesla. They probably will not buy a Tesla because they are radicals themselves, you know. Me, I don't care about whether Elon Musk think about this or that. If I like a Tesla car, I just buy a car. It's like if you all the people who buy Volkswagen, all the people who buy Porsche, today they don't realize that these brands were created by Adolf Hitler during Second World War. So these people, do they give a shit about these brands being created or actually born from Adolf Hitler initiatives? No, they don't care. They just buy the car, you know. Otherwise, it's worse than Elon Musk, you know. All this BS, you know, just make me sad. You know, people decide to buy or not the Tesla because of the view of Elon Musk or what the press is making of the view of Elon Musk. So who cares, you know? Just buy the car if you like it. That's it. The same thing for people buying a Volkswagen or Mercedes. These brands actually were sponsored by Hitler, by the Nazis, you know, during the war. You wear a Hugo Boss suit. Hugo Boss was designer for the Nazi costume, you know. Anyway, you know, people, they have their own thinking, you know, but they are not rational thinkers, you know. And this is all about rational thinking in this channel, you know. We want the hard truth about the situation of a company and whether or not we want to invest or not. So, strategic pivot of the company is obviously robotaxi and autonomy. They have launched a pilot in Austin, which plans to cover 50% of the US population by year end, pending approvals. Optimus Robotics, an AI chip investment, ambitious goal, but significant R&D cost pressure. This is definitely what Elon Musk is putting forward to basically convince the fan base to stay invested in Tesla, and to support the current valuation of the stock at 320, 300-ish something. And with this type of collapse in balance sheet items or income statement items, why the share price has not collapsed by 20%? That's what I would think that the share price would have done, you know? That's mean the fan base is really into almost like a cut-like following what Elon Musk is saying or not, and not looking at the balance sheet statement, and the income statement and cash flow statement, you know, and projecting into the futures these trends. And obviously the trends of those items are not good at all. I don't say that Robotaxi or Optimus or all these AI chip investment, Neuralinks and all the businesses that Elon Musk is doing is not going to be a success in the futures. But does it warrant the current valuation of Tesla share price today? And my answer clearly is no. That's it. You are taking an asymmetric risk that is in your disfavor, not in your favor. When the fundamentals support the share price, this is going into your favor. When the fundamentals don't support the share price, but it's only down to the hype and the projections and the supposition and the dreams, then you are at a disadvantage because all of this is nothing to do with fundamentals. Obviously, the market reaction yesterday was that the stock dropped more or less 4 and 6% after hours. And in pre-market trading, amid investor cautions, mixed analyst consensus, some hold, others see upside via autonomy. For example, Webush see a $500 target. $500 target, Webush? Dan Ive, you know, my friend, where are you getting all these numbers from? Just show me your valuation model. Show me your cash flow statement and your projected cash flow for Tesla. I want to understand how you got this $500 target for Tesla. How can you project this type of cash flow? Anyway, basically Musk cautioned that Q3 and Q4 2025 will remain choppy, but autonomy could make EV economics very compelling by late 2026. All right? So overall, let's look at what the chart is doing right now before the market open. Okay. See the trend year to date. That's the year to date trend. Look at the volatility of that stock, you know. So since the year to date, that's more or less here. All right. We started the year about $500, the valuation of Tesla. It collapsed to the low of April of 220. Can you believe that? You know, can you believe that Tesla shareholder went through a collapse of 55% in just 2 or 3 months? This is the type of volatility you have when the fundamentals don't support your share price. People need to understand that the less the fundamentals support your share price, the more extremely volatile your share will be. All right? And then from the lows, of course, from the lows of April, then it went back to 300. So you get an increase of 46%, but you are very far from the top. Of course, when you lose 55%, you need a 100% increase to go back to where it was before. But you see, the reaction on pre-market today is minus 6.773%. And I'm still amazed that it's not more than minus 6.7%, you know? Should be minus 20%, to my opinion. When you look all the comments, and you believe that 2 hours ago, Tesla expect capital expenditure to exceed 9 billion in 2025. 9 billion in 2025 capital expenditure, you know? Tesla faces difficult road ahead, and it hopes robotaxi will offset declining sales, you know? So it's all about projecting something that doesn't exist today. So that's mean, you know, this $310 is actually not supporting at all the fundamentals of the company as of today. That's my point. That's mean don't be surprised if the share price goes back and retest the 200. That's mean a 30% downside from now. Don't be surprised if Tesla go back to $220 and retest it. $220 is a very key support level, you know. You can see it goes back to almost 2021. All right? It goes back to 2021. If you invested in Tesla in the mid of 21, you absolutely make nothing at all or close to nothing at all in investing in Tesla. So that's in 21, 22, 23, 24, 25. That's 5 years. You absolutely do nothing with your Tesla shares. Unless you are one of the best market timer and you bought here, you sell there, you rebought here, you sold there, and you bought here, and you sold there. You know, but this I never met people like that, you know. Only on YouTube I meet people like that. But in real life, I never met somebody like this, you know. So I'm very sorry to be brutally honest with Tesla shareholders out there, you know. I'm also investing in Tesla because I invest in a fund that's called Max 7. But I have to be honest with myself. You know, I have to be honest with what I'm getting into. I have to be honest that this company has a deteriorating fundamental trend. And the worst is its cash flow. Its cash flow is dried up to almost zero, you know? 146 million for a company the size of Tesla is nothing. And if you remove all the subsidies for EV and tax credit and all this, then what it comes to net income and net margins and everything like that, you know? All of this is even worse than what it shows today on the income statement, you know? Okay, enough bashing Tesla. But first thing, please subscribe, like, and leave a comment. More importantly, tell me exactly what you think about Tesla. Tell me in my analysis what is wrong, other than just pipe dream in the air, you know? Oh, I don't understand nothing about Tesla or robotaxi or Optimus and all the potential for this. Yes, I do understand. But my point is about fundamentals. Where do you see in the fundamentals and the trends of fundamentals? And you can take your trading view. You can go to more financials, and you show me in the income statement where in the trend from, for example, the 21 from 21. Yeah, the share price has not moved from 21. It's not abnormal because you see 21 operating income was 6.5 billion. Today it's going to be around that, you know. And 24 was 7.6 billion. Then it went from 22 13 billion, collapsed to 8.9 billion to 6.6 billion. Now it's going to be around 6 billion. You see, the last trading 12 months is about less than 6 billion. No wonder the share price is not going anywhere, you know. The same thing for pre-tax income, 6.3 billion. And now it's around 7 and 8 billion for the trading 12 months, you know. And earning per share, you look in 2021, earning per share for the year, basic per share is 1.87. Now it's around 1.89. So no change. So how do you want the share price going anywhere if nothing is moving from the level of 2021? And the trend is everything for a stock, you know. The trend is not good. The trend is not good. There is a lot of uncertainty about Tesla. So that's it. Leave me your comment and stay tuned and subscribe and like, and see you next time.